Good afternoon, everyone. It's Brian Shannon here from AlphaTrends.net. Today's Friday, the 21st of September, 2012, and we're going to take a look at the markets and some ideas for the week ahead. So to stay tuned in till the end, I guess. The market this week was slightly lower. We saw the S&P 500 lose about 1%, NASDAQ down a little bit less than that. We did have the SPY go ex-dividend, so that was a factor. But the Russell 2000 was down 1%, and semiconductors down another 3% this week. So let's take a look at the action here. The S&P 500 we'll start out with on the daily time frame. We're still in a nice uptrend here, holding at the rising 10-day moving average, but we have seen just a little bit of a pattern of lower highs and lower lows, which puts us on near-term cautiousness. The lows for this week I think are going to be important next week, so at about 145.60 we would want to see the market hold above that. You have to remember again that this market has gotten a little bit extended to the upside, and you could say it's breaking this trend line. I don't view that as a big deal, but we have gotten a little bit extended, and perhaps we're due for a little bit further pullback. Right now, though, there's still a lot of great action in the individual names, and if we see this market back above, I'd say 146.80, that would kind of confirm that we're back above the 5-day moving average and we have a higher high. We're breaking this short-term pattern of lower highs and lower lows. Getting above basically today's high would accomplish breaking that pattern and keep us get us above that 5-day moving average, which we'd then want to see hold as well. The NASDAQ, as we said, was down slightly this week as well. It was down 0.04%, so really just kind of flat. And it's still got that upward slope to it, obviously, and we're at multiple year highs. So the path of least resistance continues to be higher. This was the level of support, the band of support that we were focused on in Alpha Trends this week. Just near that $69.95 to really 70 is our band of support. If we break below that next week and stay below it, then perhaps that's going to be a little bit of reason for concern, not necessarily concern, but for thought that maybe we're going to pull back and test the 69.50 level, or even all the way down to 68.75. So we're still in a primary uptrend. I don't view high odds of bigger pullbacks, but we could still pull back here and maintain the bullish overall environment. So a little further profit taking wouldn't necessarily be a bad thing. The Russell 2000, as we saw, the Russell was well, as you know, this is brought to you by Realtik. If you've been paying attention at any time, and I didn't mean to pull that slide up, I meant to pull this one up, which showed the Russell 2000 was down 1% this week. So, we saw a slight pullback. This was the little level of resistance I was telling subscribers yesterday that, well, first of all, these two levels were what we wanted to see taken back out. We wanted to see it get back above this line here, basically yesterday's highs, and then to the secondary nice thing to would have been to see it back above 86. We have a potential inverted head and shoulders pattern here, and we've got all kinds of inverted head and shoulders patterns, as you know, in the Russell 2000 on the weekly chart. We've been observing that one here on the daily time frame as well, and now when we look at the 10-minute time frame, we have a potential inverted head and shoulders pattern. Near-term resistance at 86.10. We get back above that next week, and then our higher low would be at about 85.50. That would put this market short-term back in the uptrend, which is confirmed obviously on the daily and weekly time frame as well. And these are, basically we're getting close to all-time highs in the Russell 2000. The semiconductors did lose ground again this week, down 3%. 2 days they've closed below the 50-day moving average. You don't like to see that, especially you don't like to see that going out on a Friday. We've got a declining 10 and 20-day moving average. We're below the 50, which is advancing. So really, this is at a pretty critical area. If we lose $32 a share next week, I think that it could spill over into the broader market. That is, that we would finally see that the semiconductors do become a drag. So let's keep a close eye on the semiconductors. What we would want to see for recovery is, at least back above 32.40, 32.60. We've got that 5-day moving average, which is declining. So it's still guilty till proven innocent in here, and we've just got to kind of again let it prove itself a little bit in here. The financials were down. They pulled back. So it's an orderly type type of pullback, but it is a pullback, and if you bought last week near those highs, you're certainly feeling some pain. We broke support at $16 a share on Thursday, and then came down to the prior level of resistance at 1580. 1580 is actually a pretty decent sized number to look at because it was the top of this range here. Anyways, we want to see 1580 hold. If 1580 fails to hold, then perhaps we're headed towards 1550, and with a declining 5-day moving average and a pattern of lower highs and lower lows, we have to wait before looking to make a purchase here in these financials. But if we can get back above and hold above 16, then we're back above the 5-day moving average, and we've broken this pattern of lower highs and lower lows. So that's why 16 should be critical early next week. Some big winners, continue to be big winners is Google. I still think it's headed towards $800 by the end of the year. Another great week in there in Google, also in Apple. And the things that are working continue to work. The things that are not working, like DEC, this has been in a horrible downtrend. It has all these little false start rallies that get people excited because it gets above a 50-day moving average or whatever, but we need a flat to advancing moving average and then higher highs and higher lows. We haven't seen that in DEC. It continues to get smashed. Research in Motion continues to be a dog as well. So the stocks that are in these long-term downtrends, a lot of people look to buy them because they think they're a value. But again, just look at what's the direction of the 50-day moving average. That alone should be deter you from staying out of these types of trades. Let's talk about not what happened, but let's take a look ahead at some individual stocks that appear to be poised for next week, including Arna. This is the weight loss biotech company. They had their approval over here. The stock sold off real strong on it. Now you can see that this level where I have this line drawn in, because we've been watching it in Alpha Trends, at about 960. This level here was prior support. Then it became resistance with that 50-day moving average. And now what we're seeing is we're back up to back above that 50-day moving average, and we have the resistance. Yesterday's high, basically, or Thursday's high was, that was on Wednesday. So Wednesday's high was 942. These days we had 939 and 944. So really above 944, it ought to get going. I think that you could probably get a head start purchase on it by seeing it back above 920 on Monday or Tuesday of next week. I would say a stop would go down near about $8.70. You don't want to be early on these stocks, though, so just let this stock set up properly. Some of the energy names, Energy's had a great run, and it's pulling back, maybe beginning to stabilize. This is the XLE, and I think that getting back above probably 75.30-ish would confirm that the buyers are back in control of the energy sector. And a few names I would watch in there would include CJES, which is trades about 700,000 shares. And this is one we had actually been in a couple weeks ago, but it broke out here. It's pulled back, and we're holding just below this important level. I think that, given the volume pattern and the fact that the group, if the group gets going, I think this one could break out here. And, you see that it failed at the 5-day moving average this afternoon, so we're going to need to see it at least back up to about 22 and a quarter. I would set an alert there. I don't think it's a buy right now because we have this lower highs and lower lows, but early next week perhaps we begin to recover a little bit. Set an alert probably at $22.20. That way you have a chance to take a look at it before it gets back above that 22 and a quarter level. COG, this is Cabot Oil and Gas. You can see here nice longer term uptrend as well. It had this pullback and gapped higher today. Now we have the stock, it gapped up. It's holding that 5-day moving average. Ideally, I'd like to see it maybe pull back a little bit and then go up and break beyond about this $45.40 level. It's been some support that 45.40 to 45.50. This looks like a key level to keep an eye on next week. I like that it recovered nicely today and held above its volume weighted average price for the entire session. So Cabot is one that's setting up for maybe not Monday but early next week. FTK, this is Flowtech. Here's another one. It's been a nice orderly pullback right to that rising 10-day moving average. It's got a little bit of resistance in this band of $12.90 to $13 a share. So if it can get back back up through $13 a share. I think that's where Flowtech gets some upside momentum, and you could probably set your stop at about $12.60. McDermott is another oil, I believe, oil service play. They broke some key resistance about a week and a half ago. We've seen this orderly pullback, again, right to the 10-day moving average. So the whole sector, they're kind of trading together. This looks like the important level in here is $13 a share, which is the same level as Flowtech, but this trades about 3.7 million shares a day. McDermott does. Be careful, though. It's got that declining 5-day moving average. I don't think it's probably the best idea for Monday, but maybe it takes a day to set up. And microchip technology, MCHP, you look at the longer-term chart in here. Let's look at the weekly, and it's been held underneath this trend line. We've got this consolidation that's been occurring, and we had that pattern of lower highs and lower lows. Now it looks like if we can break this week's high with a stop just below these lows near the rising 50-day moving average, I think microchip could get moving. The problem here is it's a little bit of a choppy stock, so I think the key level for this one is probably $34.40, and you would have to use what I consider to be a fairly large stop down near about $33.85 because of this choppiness. We don't want to keep it too tight, but back above $34.40, I think that's going to see this stock probably on its way to at least up to about $35.50 to $36 a share. Gold miners. Well, let's take a look at gold actually, because the gold continued up, and that's just in a great uptrend here. Key support right now probably at about 170. But anyways, the XME is the gold miners, and the gold miners broke some resistance here about a week and a half ago with some volume, and they've been pulling back right to that rising 10-day moving average as well. The weekly time frame, we've still got some room for these miners, probably up towards $50 a share. The problem here again is we've got that declining 5-day moving average. So we have the lower highs and lower lows with a declining 5-day moving average. I think that back above 46 and a half-ish would get the momentum back in here, but this is the area where it should begin to stabilize. You don't want to make purchases in a place where it should be stabilizing. You want to see the stabilization, and then you want to see it break resistance and create a pattern of higher highs and higher lows, so you have some momentum. But a couple of the mining stocks, such as Stillwater, I think Stillwater looks like it has the potential to run a little bit from here. Looking at a 10-minute time frame, the more important level in here is probably about 1270. PZG, this is a low-priced one with a good looking chart. You can see I've been talking about it already this week for subscribers, but I think it's got to clear 280 to get going. If it can do that, then it should be game on for PZG. A few other names to keep an eye on next week would include Shutterfly. Shutterfly was a perfect, stage 2 uptrend, stage 3 distribution, stage 4 decline. If they didn't scare you out, they wore you out over the last year. Now we've got that 200-day moving average flat to rising. We've got a rising 50-day moving average. The 10 and 20 are also rising, and it trades 814,000 shares a day on average, holding this rising 10-day moving average. It looks like it's just setting up real nicely. The problem again is a declining 5-day moving average, and we'll see that this moving average is going to get a little messed up because of Tuesday's price action. But I do think that the buyers have a chance to take back control above about $33.60 in here, and it might be worth a purchase. Worst case stop at this point would be down at about $32.40. If it gets down to $32.40, if it breaks out and then gets down to $32.40, I think you got to get rid of it. Ideally, what we want to see though is we want to see it rally up to this 33.40 level, 33.60 level, then pull back, maybe hold on that 5-day moving average, create a higher low, and then break out. That way we could set our stop underneath whatever that higher low might in fact be, and that gives us more confidence in the trade, maybe the ability to trade a little bit higher share size because our stop wouldn't be so far away. VMware, VMW, a lot of you know this name, I'm sure. It broke this little cup and handle, and now it's made this return turn move to the rising 10-day moving average with this prior resistance now holding as support. The weekly time frame, you can see, it looks like it's got some room to still run in here. This is the breakout that just occurred. I think it could be up at $105, $107 a share next week. And in this case, what we have is we have the stock, it gapped up and held above that 5-day moving average today. So that's nice to see that if we break today's high, I think that with a low just below $100 a share, that's where the momentum continues in this name, and VMware should be able to get moving higher up towards, again, 105. And I don't even think you need to see it break today's high. What we want to see is here we saw that it did hold above the volume weighted average price. I think even probably above this little peak right here, maybe at about 101. I would at least set an alert for about 101 in this stock, and maybe set a stop about $1.25 away. Vertex was one I had actually drawn some charts up on this week, and it's been a little bit choppy in here. I posted that on Twitter, but the 30-minute time frame, it did finally break this 52.25 with some conviction. It did it on the open the other day, and that's why you don't chase those opens. But here today we finally saw that it got going, then it had a nice tight consolidation and another push higher. So I think that Vertex looks like a stock that's likely to continue up towards about $62 a share or so, and you could still buy it. I think you'd want to see maybe if it pulls back a little bit further down towards about 58.70 on Monday, and then buy it on some strength, let's say above $59.30. Now, it's not an exact plan, I realize that, but we have to understand that the market's going to give us more information to work with. So our plan is incomplete until we have all the key levels drawn in basically by the market. We don't know how far this little pullback is going to go. So again, we have our plan of action, but it's not actionable yet. We have to wait for it to become actionable. VRX, Valiant Pharmaceuticals, gapped up on some big volume here a couple weeks ago, and it's been pulling back, as you can see. It's beginning to stabilize, though, in here. We've got that 5-day moving average, which is still declining. However, 5, 4, 3, 2, 1. We'll be getting rid of this data on Monday, so that 5-day moving average is going to flatten out. And I think that early next week, if you see it above this high here, even today's high, which was, let's take a look at today's high. Today's high was $56.30. If you see it back above $56.30, that 5-day moving average will have flattened out, and then I think that's the time to get involved for probably a quick pop up towards 58.5, and then we'll see if it can recover further from there. What we need in this stock also is a little bit more constructive action. That is, we'd like to see it get up to maybe 56 and a dime, test that 5-day moving average, and then break beyond $56.30. Anyways, I hope these ideas are useful to you, and you found some good ones off of last week's list, because there were several good winners in there. And next week I will be promoting an annual subscription to Alpha Trends for just $399. It's normally $799, and this special offer is something that's only going to be around a little bit. So look for that, and thanks for tuning in. Have a good weekend.